In this video, we're going to walk through the basic income statement and balance sheet disclosures for a lessee. The following facts pertain to a non-cancelable lease agreement between Ashler Leasing Company and McKeeson Electronics, a lessee for a computer system. We get information regarding the commencement date, the lease term, the fair value of the asset, book values, residual values, the lessor's implicit interest rate, the annual lease payments. First thing we would have done, we used the 8% annual lease payment to calculate the fair value of the lease, which we did and were also given as $313,043. Let's go ahead and see what income items will appear on the lessee's income statement for the year ending September 30th, 2021. Note that our lease began on October 1, 2020, so this is a year later. Our interest expense easily comes from our interest amortization table, and that would have been our initial lease amount of $313,000 minus the principal payment or lease payment we made at the inception of the lease, which brought us to a $250,000 balance times our 8% interest rate. Our amortization expense on the lease, we take our rights of use asset and amortize it over the lease term. We had $313,000 initial fair value as we calculated in our amortization table and that we were given, and that's simply spread over a 6-year period. What items will appear on the lessee's balance sheet? We have a non-current rights of use asset in the amount of $260,869. That's the initial rights of use balance minus the amortization expense for the current year. Our current lease liability will simply be our next lease payment that we have to make on October 1st, the $62,700. The long-term lease liability is the present value of our remaining lease payments, years 2022 through 2025. We have 4 more lease payments to make. The present value of those lease payments would be $207,670. All right, what items will appear in the lessee's income statement for the year to September 30, 2022? Again, we're going to have interest expense and amortization expense. Our interest expense, once again, comes from our lease amortization table. It's essentially the $207,670 carrying value times 8% interest. The amortization expense for the year is the same as the prior year. It's the initial asset value spread over 6 years. Our rights of use asset has now declined by another $52,000. It's the initial carrying value minus amortization for 2 years, or we can simply say it was the prior year's rights of use balance minus the current year's amortization expense. The current liability on our lease is again the next lease payment we have to make, $62,700. The long-term lease liability is the remaining lease payments, years 2023 through 2025. We've got 3 payments. The present value of those payments is the $161,584. Let's walk through the same exercise, assuming our year end is December 31st. First, our interest expense will be 3 months of interest. That's going to be the 2027, which would be for the first year, multiplied by 4 over 3, or 3 over 12. So we will take 3 months of interest. The amortization expense will again be the answer from part 1, our $313,000 divided by 6, in this case multiplied by 3 months, because 3 months have passed in the current year. Our non-current rights of use asset will be the initial $313,000 minus the first 3 months of amortization. Our current lease liability will be the principal portion of the 2021 lease payment plus our accrued interest that we booked at the end of 2020. So that's the principal portion of the lease payment, $42,673, plus our accrued interest. The long-term lease liability is the present value of the remaining lease payments. We've got lease payments in years 2022, 23, 24, and 25. So it's the present value of those remaining lease payments, or $207,670. For the next year, our interest expense on December 31st, 2021, we will have had, originally we booked 3 months of the 2020, so we need to record the remaining 9 months and 3 months of the 16,614. So our interest expense will be $19,174. We will have a full year of amortization expense, which is the $52,174, and the non-current rights of use asset on our books will be the $247,862. That is the prior year's balance of $300,000 minus the current amortization expense, or it's our initial rights of use asset minus all of the amortization expense to date. Both give us the same $247,826. Our current lease liability is the principal portion of our 2022 lease payment, which is the $46,086 plus our accrued interest. So it's $50,240. The long-term lease liability is the present value of the remaining 3 lease payments, $62,700 a year for 3 years at 8% interest, has a present value of $161,584.